How can real estate increase your passive income? So we've got Larry and Justin,
and I think Shane's going to go.
and Shane. We sort of forgot to put your name in there, Shane, as well. We didn't know you, all three of you were joining. So if you guys want to turn your cameras on, I will throw the hosting duties over to Larry, and Larry can share his screen and they can get going on their presentation, and hopefully their grammar is a little better than ours.
Thanks, Tim. Thanks, Azad. I'm just waiting for, oh, here we go. So I'll take over screen sharing and switch it over to our presentation. Thanks for having us. Good to see a healthy crowd this Tuesday. I am Larry Scammell as well. Shane Shepard and I are both from Core Capital. Justin Beaubier, who I'll introduce in just a moment, is CEO and founder of Crystal Creek Homes. And I am going to go like that. So purpose of our conversation this evening, both to introduce you to Justin, the CEO and founder of Crystal Creek Homes, but also maybe share for the first time a way in which you can invest into real estate, into an award-winning Alberta home builder, which is Crystal Creek, without actually having to own the real estate. Now, I know that Tim and Azad work routinely with you on ways that you can buy multiple properties. So this, perhaps for the first time, will be a new and perhaps an interesting way that you can invest in real estate without having to own that particular piece of property. Before we get into it, forward-looking statement, as you should expect with any and every type of investment-related conversation. Really what this is saying, two things. This is not a solicitation for an investment. If you do see something or hear something that you're interested in, we'll follow up with you afterwards to give you more detailed information and all of the related securities documentation. And further to that, you've probably heard the term past performance isn't necessarily an indication of future results. So while we do our level best to get you accurate and current information, there's always a possibility that something could happen that would alter or change the investment outcome. I want to turn it over to Justin now to speak to you from his perspective, give you a little bit of his founder story, and bring you up to speed on some of the things that Crystal Creek has ongoing in both the Calgary and Edmonton markets.
Great. Well, thanks for that, Larry, and great energy, guys. Thanks for having us on the call this evening. For those that don't know Crystal Creek Homes, I am the individual who started Crystal Creek back in 2004, and it's actually a really interesting story because I grew up a carpenter's son. I was a tradesman for a number of years and really enjoyed what I was doing, worked for a number of different home builders, all in the new home building industry. And along came one day when I was injured at work and I was off and couldn't conduct my duties for about 4 months. And so, you know, here I was, this tradesman, rock star, 4 kids at home, and no income. And so it got me to thinking about, you know, it's great what I do, but I really trade, you know, time for money. Love my job, but, you know, maybe it's time for me to kind of think about a career change. And is there something that, you know, I should start looking for? And oddly enough, about a year and a half later, my sister approached me about, hey, wouldn't it be great if you could build our house? You know, you're in the home building industry. Maybe you could just build ours instead of building it with the home builder they were dealing with. And they own their own lot. And really, that was the start of Crystal Creek Homes. So in 2004, I incorporated a name and built one house and thought, okay, well, maybe there's something to this, and we'll kind of maybe give it a little bit more of an effort while I was continuing as a cabinet installer, which is what my trade was for over 15 years. And, you know, a lot of people, I say, I'm just going to try this for a few months and see what happens. And I tell the story that I just haven't been back to work since 2004, once the company started to take off. So, you know, for me, coming from sort of humble beginnings and starting off with 1 home and then expanding to 3 homes and then 5 homes and 10 homes, it was a long, arduous process. And really, I became educated very quickly on how much capital you need to be a home builder. Typically what ends up happening is I will approach a developer and say, I would love to take on 10 lots or 15 lots and build a show home. And the developer will say, okay, that's great. So now stroke me a check for a deposit against the lots. And that deposit might be $1 million, $1.1 million, $2 million. And so coming from humble beginnings, where do you get that money to stroke a check to a developer that is developing the land and you're not even going to be in a position to start selling for almost a year? And so that's where even early on in my career, I started to rely on investors for how could I come up with that capital. Really, Crystal Creek Homes started to change through the years of 2010, 2011, where we started to deal with family offices that could write bigger checks. And that was a great template. It was nice to have larger investors, but really what ends up becoming, from my perspective, is investors have always been my boss, if you will, at Crystal Creek Homes. And when you're dealing with those large family offices, they start to dictate your business plan. And so, consequently, we started to come up with a different template where rather than dealing with large family offices, how could we offer this to individual investors and make it a win-win for Crystal Creek, the investors, and at the end of the day, sort of share in what we were accomplishing as a builder. So, through that process and dealing with investors, I've always looked at investors as that's my boss, that is my future, that is going to get me into my next subdivision. And so I have to treat all of my investors with tender care and gloves and ensure that they're always going to get their money back. We're always going to make sure that they have their returns paid on time. And when challenges happen, just be really honest and say, look, here's the challenge that we're currently facing. Over the last 5 years, we've had a lot of those challenges as it's related to our economy here in Calgary and Edmonton since 2015. And so we've seen some of that. Fortunately for us, we've been able to come out on the other side. We've still been able to maintain returns for our investors. And now going forward, of course, with the expansion that we see in the market, company is growing. And so as a result, we need to take on more capital and create more of an investment portfolio. Larry, I'm noticing that, am I still on?
I can hear you. Can you see my screen? It should be of Edmonton.
Okay, great. Yeah, no, I came back on here. Sorry about that. So in Edmonton, Crystal Creek moved up to it started in 2004 in Calgary and moved into the Edmonton market in 2013. So currently in Edmonton, we are in 4 different communities. Creekwood Collections is just closing down. Prescott is a really nice development, 40 lots that we're going to be taking on in Spruce Grove. The community of Alon is a community that is in Beaumont, and we're just getting started on homes there. We're just getting building permits, so that's exciting. And then Maple Crest has really been one of our flagship communities of Crystal Creek Homes in Edmonton. We've been there since the beginning in 2013, where we actually took over the assets of Greenboro Homes when they went bankrupt. And so that was a very educational experience and was a good one. Maple Crest, we love the developer there. That's Dream Developments that we deal with. Very consistent. We know what to expect. Mostly duplexes, single family homes, starter product that we would relate to. And it's been a great success story for us in Edmonton in that particular community. These are some of the communities that we're involved in Calgary, and it's been quite a run the last little while. As the company has expanded and taken on more communities and more opportunities. Since I started the company in 2004, I've always dreamt really big, but I could not dream as big as what happened this weekend in our community of Belvedere. So in Belvedere this weekend, we released our next phase of lots without having pricing. with having models, but we're not going to commit to pricing just yet because we're not going to have permitting until about July of this year. But we thought, you know, there's so many people that are asking, we're going to release it to the public, say, here is an indication of the price that you can expect to pay. However, it's not going to be finalized until June of this year. If you'd like to give us a $5,000 refundable deposit to hold your lot in line, you're more than welcome to do that. Pick your lot, pick your house, pick your selections, and you'll be waiting in line. Well, this weekend, phase 2 has 33 lots. We took 34 deposits. And so, yes, that doesn't quite add up. We've even taken backup deposits. I've never imagined that we could do something like that in a weekend. When we talk about the market being crazy, the market being hot, I've never seen anything like what's happened in Belvedere this particular weekend. Belvedere is a fantastic community in the east end of Calgary. Most of the product there would be a single family, front attached garage. There's some zero lot line product in there, and there's also some townhome product that we're building. For those that know Crystal Creek in Calgary, communities like Curry Barracks is really what we're known for. We've been in the community of Curry for the past 10 years. That's a very, very much estate type product. And, you know, for Crystal Creek Homes, that's really where we started. We started building $1 million homes, and we gradually came down in terms of some of the offerings that we took, like, for instance, Belvedere, where it's more production type building. But Curry is really our bread and butter. Curry is what we've been doing, you know, consistently over the past 10, 12 years. And fantastic community. You know, I've said before that I don't know how much sales actually matters in a community with that kind of a location, but people are coming in there. You know, they have budgets of anywhere from, you know, $1.5 to $2 million. A lot of times they can spend much more than that, but they're choosing to spend that in the community. It's a higher maintenance client for sure that we get to deal with. But just so people kind of get a sense of how these communities work, for Crystal Creek, when we create a community like this, it becomes an investment opportunity where we create a limited partnership or an entity specifically for just those lots. And so that's where the opportunity for investors to come in and look at, instead of saying, well, I don't want to invest in Crystal Creek Homes, the mothership, but, you know, you've got 15 lots in Curry. It's got a lifespan of maybe a year. If I were to put my money into that, what kind of a return could I get just on that project? And that's the template that we've been able to create that has been really a winning success formula for both our investors and for us as a builder. It's really a win-win situation.
Excellent. Well, thank you, Justin. My name is Shane Shepard. I'm a partner and exempt market dealing representative at Core Capital, which is a division of Waverly Corporate Financial Solution. And basically, Core Capital, I mean, why that's important, our investment dealers in Toronto, we're based in Saskatoon, yet we're dealing with Crystal Creek in Calgary. But just like you would go to someone like Azad and Tim to buy a home, or even Danielle to get a mortgage, we are licensed representatives. So we're licensed across pretty much all of Canada except the Maritime provinces. And there's 3 partners, and together we have over 25 years of financial experience, basically raising capital. So our role with Crystal Creek is essentially that of corporate finance partner. And as Justin alluded to, as they go into new communities and as they grow, their financing needs grow as well. So we partnered with them to help with their financing needs. And you can see here some of the statistics. I mean, we've worked with thousands of investors across Canada. We've been involved in both domestic and international ventures, raising close to 200 million. And now we have almost 365 million of capital raised. So it gives you a little sense of who Core Capital is. Now, really our role between you as an investor and Crystal Creek is we're the conduit, or we're the middlemen. So as licensed representatives, we're really there to make sure that we look after your best interests and make sure that we're looking after your portfolio, essentially. So in order to qualify for an investment like Crystal Creek and the ones we're going to be talking about, you need to qualify. And there's 3 categories. You may or may not have heard of them: eligible, accredited, or permitted investors. And each one of them has 3 categories that you can qualify by. So the first one is annual income. That's alone or combined with a spouse. That's for the current fiscal year as well as the past 2 years. Net financial assets is essentially anything that's liquid within your portfolio: stocks, bonds, cash, tax-free savings accounts, RSPs, seg funds, mutual funds. I mean, the list goes on. Basically anything you would have either in a self-directed account or with your advisor. And net assets is essentially anything that the equity in your home combined with the value of your net financial assets. So to qualify as an eligible investor, individuals would need an annual income of $75,000 per year, or $125,000 if combined with a spouse. There is no threshold for net financial assets, but there is a threshold of $400,000 in net assets. So again, that is a combination of your net financial assets plus any equity in your real estate. For the accredited qualification, it's a little higher. It's a little higher in terms of what the annual income is. It's $200,000 alone or $300,000 with a spouse. Net financial assets are $1 million and net assets are $5 million. Permitted is a very special category. It's the top point, I would say 1% of all of Canada. There is no income threshold here. Instead, what we have are net financial assets of $5 million or net assets of $25 million. What's important to realize here, it's any one of these categories depending on where you fall. So I would encourage you to look at this, because this is really the starting point, and determine where you would fall, and that's the type of investments you would be eligible for.
Thanks, Shane. And I will now take you through an overview. It's a high-level overview. We're not intending to get into a whole lot of detail here on this conversation, but I will walk you through. There's 3 different types or ways that you could invest with Crystal Creek. And what we've accomplished is we've created a really flexible option that pertains to, as Shane just talked about, whatever level you qualify as, but also the source of funds that you consider using. Because not a lot of people realize that you can use RSPs if you have existing RSP accounts or a tax-free savings account to invest into a company like Crystal Creek Homes. So I'm going to give you a brief overview of the 3 different types of investment. And now that I see the chat box coming up, I'm also going to post a link where anybody who's interested in more information in a follow-up conversation, just click on the link that I've posted in the chat box, and we will be following up with you to schedule a more detailed individual conversation. So just a reference, in the chat box, I have put that link to the landing page where you can register your information. So the first type of investment is called a mutual fund trust. Now, I'm sure many people on this call have heard of or perhaps invested in a real estate investment trust, or a REIT for short. A mutual fund trust is very, very similar, in fact, almost identical to a REIT in terms of how they behave. Main difference between a REIT and a mutual fund trust: most REITs are publicly traded, whereas most mutual fund trusts are private or not publicly traded. Now, in the case of Crystal Creek's mutual fund trust, think of this as a pooled or diversified investment approach. And what I mean by that is your investment into the mutual fund trust is going to be invested into multiple or various different communities where Crystal Creek Homes is active. Take, for example, the community of West 77th in the southwest of Calgary. The mutual fund trust made an investment into that community based on the funds that were raised from investors. That investment was made back in July. The mutual fund trust also invested into Curry Barracks. That investment was made in October. And the next community that has been identified for investment is the community of Belvedere. Now, if you take a look at the screen right now, you'll see that this is a way to naturally diversify your investment across multiple different communities. So both from a geographical standpoint, you're getting that diversification, but also from a product type. So if you remember what Justin had said, the product that is built in Belvedere is quite different from what you would expect to see in Curry Barracks. Case in point, the average sale price in Belvedere might be in the 600s, whereas Curry Barracks would be averaging 1.4 to 1.5 million. So again, you're given that opportunity through your investment in the mutual fund trust to get involved in multiple different communities. The second option or investment type is a direct investment into the limited partnership itself. So at this time, Belvedere as a community is open for investment. So if you qualified as accredited, you would have the option of either investing directly into Belvedere, which would just be that community, or if you wanted to use cash or your registered funds, RSP or tax-free savings account, you could choose to invest through the mutual fund trust, which would also get deployed into Belvedere along with the other two communities for investment. Now, as you can see here, it's really the same end result. It's just a different way of getting there. The third investment structure is called a convertible note, and this would be the earliest available investment option. In terms of the timeline, which I'm going to show you on the next slide, this would be the first and the earliest opportunity to invest in any one of these communities. Now, the convertible note, as the name would indicate, does have an option for you to convert that investment into the project limited partnership. So this is considered a shorter term investment. It's typically up to 12 months. At that time, you have the option of converting into the limited partnership for that particular community. What I'm going to walk you through here is a typical timeline or expectation of time to invest in any one of these different communities. Now, as Justin mentioned, in both Calgary and Edmonton, the various communities where Crystal Creek is active, these are all set up as independent or single purpose limited partnerships. So take, for example, West 77, there are 30 lots in that limited partnership, 30 lots in that community. And Curry Barracks currently has 22 lots. Now, in this example across the bottom, on the left-hand side, the start would be the start of that community, whereas the finish would be once all the lots are sold, built, and turned over to the home buyers, that limited partnership is essentially wound up and it's finished. So some of the benchmarks or the milestones throughout the life of the limited partnership, the first thing you'd expect to see is a lot draw. So in the case of, let's take Elon up in Edmonton, Crystal Creek is one of 3 home builders in that community. And the first phase of lots had 120 lots in total. Each of the 3 builders selected 40 lots. It's not really different than, say, a sports draw, where you would have your number and you go around and each home builder picks their lot. Once the lot draw is done, the next milestone or benchmark you would expect to see would be the building permits being issued. Now you can see here on the timeline, there's always a period of time between the lot draw and the building permit. But the next benchmark that you would expect to see would be a sale of a lot. And keeping in mind, Crystal Creek can't offer these lots in any community. They can't offer these lots for sale until such time as they have the building permit. Now the reality is, once the sale occurs, any one of us walks into the community, we pick that lot, we pick this type of house. Depending on the product type, take for example Curry Barracks, you might expect selections to take anywhere from 30 to 60 days because it's a more expensive product, it takes more time to build, and there's more choice and flexibility in that product type. As compared to, say, Belvedere, where there'd be less choice, you might have 2 or 3 choices of color, less selections for things like hardware. So it's going to be a shorter selection period, but also a shorter build time. Once the selections are complete and the home is built, it's turned over to the home buyer. That's the point where possession occurs. Congratulations, you get your keys. Welcome to your new home. In the case of Curry Barracks, as an example, there's 22 lots. 6 to 8 months after that last lot is sold, you would expect to see this limited partnership would be concluded. Now, from an investment standpoint, The stars on this timeline represent the different times or points of entry where you as an investor could get involved. Now, the first one, which is the earliest, this would be the convertible note option that I discussed in the previous slide. If you were to invest here, typically we would expect to see up to 12 months before that building permit is issued, where you'd be given the option to convert into that limited partnership. If you chose to convert into the limited partnership and stay the course for the duration of that investment, you would expect anywhere from 3 to 4 years in total if you were among the earliest investors in that community. Now you'll see that there's entry points 2, 3, and 4. Typically, each community that we would raise capital for will have anywhere from 3 to 4 different rounds of capital, depending on the need for that particular community. If you got involved early, you would expect up to 12 months for that conversion to take place. If you didn't get involved here and say you got involved in the second or the third round of financing, that's where you would expect to see anywhere from 24 to 36 months in totality for you to be involved in that particular investment. Here, I'm going to give you an overview of the 3 different types. Again, this is a high level. It's intended to give you just enough information to see where your interest might lie. The convertible note, very, very simple, straightforward. What you see is what you get. This is a fixed rate debt product. It offers a 12% rate of return, and that return is paid to you every month. So with this, you actually get post-dated checks that you can deposit at your convenience each month. And again, depending on the amount that you would invest, you would expect a 12% rate of return paid monthly for up to a period of 12 months. The second option would be a direct investment into a project limited partnership. Now, keeping in mind, this will connect you to one specific community and that community only. In order to qualify to invest in either the convertible note or the project limited partnership, you would need to qualify as either accredited or permitted, and both of these investments accept cash only. There's 2 components to the return for a limited partnership investment. It's a preferred return plus a percentage of the profit split on all the homes in that particular community. If you're looking at this, you're probably wondering, why is there a range from 20 to 35%? Great example. When we look at, I'll compare apples to apples. The community of Belvedere, which has a lower price point in terms of sale as compared to, let's say, a Curry Barracks, we would expect to see perhaps a lower margin on the home in Belvedere as compared to Curry Barracks. We would also expect to see a shorter build time. And in the case of what Justin has shared with us, the sales velocity in the community of Belvedere would be so great that we would expect a shorter time frame for you to be involved or invested. So really, those are the factors that determine what the percentage of the profit split is that goes to the investors. The third option is the mutual fund trust. Now, what I would say to you is, if you have or are considering using existing RSPs, an existing tax-free savings account, or if you're interested in making a contribution to your RSP for the 2021 tax year, the mutual fund trust is the only option for you to be thinking about, because it's the only one of the 3 that is open to registered investments, whether it be RSP or tax-free savings account. Keeping in mind, it does accept cash as well, but realistically, the reason why you would consider this is to use existing or make a new contribution to your RSP or tax-free savings account. The return for the mutual fund trust is going to be generated by the various project limited partnerships that it invests into. So you'll see a blended return over the course of the year, depending on where those investments are made or which communities those investments are made into. Now, we're going to walk you through the available investment options here, again at a high level. I'll encourage you, if you haven't done so already, click on that link to go to the landing page to register your information with us, and we'll follow up and give you more detailed information afterwards. The next closing for the mutual fund trust has been set for February the 28th. Keeping in mind the deadline for your RSP contribution for 2021 is actually March the 1st, hence the reason why we're coinciding this closing with that. If you are considering using RSP or a tax-free savings account, this is the one for you to consider. turn it over to Shane here to walk you through the available limited partnership options, as well as the 2 convertible note options that currently exist.
Thanks, Larry. So if you recall from my the slide that I spoke about in terms of how you can qualify for these types of investments, the next 2 that I'm going to talk about, 2 limited partnerships and 2 convertible notes. These are for accredited or permitted investors. And one thing to keep in mind, they are cash only. So again, if you're looking to utilize registered funds or tax-free savings, RSP, things of that nature, the previous slide that Larry just spoke to is what we would talk to you about. So here, the first community in the limited partnership is Belvedere. This is the one that Justin had referred to previously, where they had sold out on the weekend. This is in the, as you can see here, in the east part of Calgary. Larry, you can just switch over for me here. So we're looking to raise $635,000. We're closing on this project on February 4th, so next Friday. And as I mentioned, it's a cash only investment. In here, we're looking at an 8% preferred return plus a split of the profits. And we're looking at a hold period of anywhere from 24 to 30 months. So there's currently 16 firm sales to date, and there's 6 conditional sales. So great opportunity to get involved. Again, this is the, we'll call it the starter or the $600,000 range of a home in Belvedere. And Larry, you can go to the next one for me. Thank you. The next community is Currie Barracks. For those of you that are unaware of where Currie is, really Currie is one of, it's a very desirable community in Calgary because of its proximity to downtown. You're literally 5 minutes from downtown. So Crystal Creek has been in this area now for approximately 8 years, and they've had tons of success. For Currie Barracks, again, same closing date of next Friday. We have $1 million available. And here we're looking at, again, an 8% preferred return plus a split of the profits. Timeline is the same, 24 to 30 months, because this project has been currently going on. And you can see here, there's 10 firm sales to date, and out of 22 lots. That's 8 homes in construction, and that's 7 pre-sale and 1 spec. So great opportunity to get involved with Currie. Now, those are the limited partnerships. If you're looking to get involved in the convertible note, that's the one that is at the beginning of the investment that provides a 12% rate of return fixed for a 12-month period. I have 2 opportunities. The first one is in Maple Crest. And if you recall, this is where Crystal Creek had their start or got their start in the Edmonton market. So they've been in this community now for almost a decade, and they've really refined the recipe here. In this, we're looking for $250,000. And once again, it's a February 4th closing. And this is a cash investment. So just to reiterate, for this one here, it's a coupon rate of 12%. It's paid monthly. So in the case, for example, you put in $100,000, you get 12 post-dated checks for $1,000 each, and you deposit them at your leisure. And at the end of 12 months, you have the opportunity to roll those into the partnership at a higher preferred return or receive your principal back. The next opportunity for the convertible note is Belvedere. Once again, this is Belvedere 2. The first one that I spoke about earlier was Belvedere 1. So this is Belvedere 2. And in this phase, we have 34 lots, and we expect building permits to be in place by summer. Here we have $190,000 available, and same thing, closing date February 4th. And it's exactly the same as the previous convertible note that I spoke of, the 12% interest rate, and that's paid out on a monthly basis over a 12-month term. And here you can see we currently have 34 lot holds. So really, I mean, if you want to get involved in this market, I would encourage you to click on the link that Larry had posted in the chat, and we can provide you some more in-depth information so you can continue your due diligence on this.
For sure. And also with the registration page on that link, Beyond getting more information on the available options that we've kind of introduced you to here, we can also get you registered on our priority investor list. So as future investment options become available, we can get you into a priority situation where you would have first opportunity to take a look at future investment options, because earlier investors, as you can see, earlier investors are rewarded for investing, and typically there's a higher percentage of the profit that is split with the earlier investors as compared to those who come in later.
So next steps here, we can take some questions here through the chat function, or if you have to get off this call, you can, like I said, register at our website there that Larry put in the chat box. So let's see. So the first question, Larry, is, do these note owners, are they placed on the title of the properties?
Let's make sure I'm not on mute. There we go. Great question, Sean. Thanks for that. So the answer is no, you won't appear on title for those lots. However, in exchange for, in terms of security, you're offered a corporate guarantee, both a corporate guarantee from Crystal Creek Homes, who would act as the general partner in all of these different community partnerships. And also the loan agreement is signed by that particular limited partnership. So you're given security that's tangible, but in terms of being registered on title, no, you would not appear or be registered on title.
Next question from Mark, is there a minimum investment amount for eligible investors? Well, actually two questions. Is there a minimum investment amount for Mark, and Yoshi, is there a minimum investment amount for eligible investors? So basically, I'll take that one, Larry. We really don't work with minimums. We work with maximums. And as registered investment advisors, our role is to make sure that these investments are the right fit for you. So we always use the example, if some 20-year-old was working, you know, at, let's say, a gas station for all intents and purposes, bought a lotto ticket and won $100,000 and wanted to invest the whole thing with us, we couldn't take it, because we need to perform what's called a know your client and make sure that this is suitable. And so suitability means we would need to make sure that he's not putting all his eggs in one basket. So in that case, we would be able to take, you know, a certain portion of his net financial assets, if you recall from how they qualify slide, and put it into this type of investment. Second question from Sean. Larry, does that indicate bank loans are in first position ahead of the note or partnership?
Yeah, so in terms of the capital stack, you would expect to see bank for construction financing always in a first position. Behind that, when we're dealing with limited partnerships, you would see that the limited partnership would have an equity position in these various lots. So to your question, would the bank be in a first position ahead of the note or the partnership? The answer is yes. There's another question here from Mark. Is there a credit rating done on the investment to determine investment grade? Great question. No, in the exempt market, that type of grading doesn't exist. What you're thinking of is more to do with the public markets, where those, in particular bond ratings, where those ratings would be done. So in the exempt market, not at all common to see that type of rating.
And to that,
again, sorry, go ahead.
I was going to say, to that effect, just this is for Mark and for everyone, but if you recall, when Justin, when he was talking about his origin story, when he started out, he was borrowing capital or financing his projects from friends, family, other professionals, other CEOs. And so he was able to capitalize based on that. So really, in this case, there is no need for, or I shouldn't say there is no need, but there isn't a metric in the private market for those type of for those type of ratings. Sean is asking, how can a profit share be determined when the builder is in complete control of cost of construction, management fees, etc.?
I was going to ask Justin if you wanted to get involved.
Sure. Yeah, no, I'm happy to take that. I think what's interesting is as we create these partnerships, or as we create these entities, they are single purpose entities that operate on their own. So the accounting is all specific to that entity itself. So as a builder, we pay Crystal Creek Homes a management fee in order to provide its services. But one thing that's kind of nice in terms of a win-win that we've created is that, you know, if something were to happen to Crystal Creek Homes, the entity itself could go and hire another builder. There's restrictions put on what we can and what we can't do, and it's open book accounting. Any investor can come and take a look at those books and see what the profit is. It's in my best interest to have as much profit as possible in each individual entity, because we have a share of the profit just like you do. So you're really, as an investor, you're my partner. We're business partners in that particular entity, and so that's where the challenges around you know, doing whatever we can't. The accounting is open book and is open to review.
Thanks, Justin. And adding a little bit more to what Justin has said, in terms of the waterfall or the order of payout, the preferred return, if you recall, there's two components. There's preferred return, which is paid along the way, and then there's the profit split. So first and foremost, that preferred return is paid in a priority, meaning the investor gets paid that preferred return before there's any profit distribution, number one. And number two, the percentage of the profit, once it's calculated, that goes to the investors, well, the amount that doesn't go to the investors goes to Crystal Creek. Same thing, Crystal Creek can't access those profits until the investors get their portion of the profits. So beyond the open book accounting, there are also some triggers or mechanisms that are in place by way of the limited partnership that really kind of keep that order of payment in line.
Another question from Mark, is there an option to reinvest your earnings from the investment similar to a DRIP, especially for the first option of the early investment option?
I can take that one. So the DRIP, which is distribution reinvestment program or plan for those who aren't familiar, there is a DRIP option with the mutual fund trust. There is not with either the convertible note or the limited partnership. Next question, will the preferred return and shared profit paid to the investor be subject to regular income tax? Great question. Shane, do you want to take that one?
Yeah, so the preferred return is actually, it's important to note that it's a return of principal or a return of capital. So it does not trigger a tax event. However, any distribution of profit will be taxed as income.
Great questions. And further to that, with the convertible note, just to be clear, that is treated as interest income and that would be taxed accordingly. However, as Shane mentioned, the LP or the limited partnership has some tax efficiencies that it can offer to the investors. Again, if you haven't done so, we'll encourage you to click on that link and register your information so we can set up a one-on-one individual conversation with you to go through more detailed discussions if you do have an interest.
Another one from Sean, is Crystal Creek ownership taking on a personal guarantee on these notes?
Justin, would you like to comment, or we can take that over?
Sure. So there's a corporate guarantee on all of the notes that are in place. And of course, I have corporate guarantees. I have personal guarantees as it relates to the corporation. So in essence, I guess through a trail of events, I guess I could say yes, but corporate guarantee is what is offered on the notes that are within the partnerships, if I'm answering that correctly, guys. Yeah.
For sure. Yeah, and in addition to that, it's the limited partnership that is signing up on the loan agreement. So your funds, your invested funds would actually go to that limited partnership. So you're actually getting multiple components of the security. As Justin mentioned, you get a corporate guarantee, which does have a personal guarantee along with it. Plus, you're getting, let's call it, access to the assets, which in this case are the lots that are owned by the limited partnership. Great questions, though.
Awesome, guys. Hopefully everyone, yeah, that was awesome. And I just wanted to stress to everybody out there, when I came across Larry late last year, Tim and I have actually known Justin for a while. I live up on the west side there, so we've actually been in his office. Tim, we were trying to build 4 townhouses up in Bankview. This would have been in 2012. It was early days. And Crystal Creek wasn't even doing multifamily, but they definitely had a look at what we were doing. And when we came across these guys, we've seen Crystal Creek's name, and we've seen Larry and Shane and Core Capital. And if anybody's considering doing something like this, you want to be with straight shooters. And Tim and I strive to, for our business, Calgary Real Estate Wealth, to call the nonsense out and work with the best. And that's why we really want these guys to come on board and give their presentation and help us out, and then offer our investors out there something different, because not everybody, and we have to stress this, investing in real estate can be a pain in the backside. We say it every day. And doing it this way at arm's length, you have to give your personal guarantees. That's just part of investing in real estate. And if you want to get involved in something like this, we couldn't think of better guys to do it with. So we hope,
And the returns that they're offering, you know, all you have to do is look at them. They're not out to lunch. You can compare that to, you know, say my foray into the stock market, where not knowing anything what I was doing, I didn't get returns like that. 12% is very, very reasonable in this type of market, this type of product. You know, so for people who, like Azad said, they don't want to go through tenants and toilets and stuff like that, this is a great way to get in the real estate the real estate market. But you know, you're not owning that piece of property, but you're getting a great return.
Yeah, not only that, first class Crystal Creek Homes. We've seen their product. They've got a range of products, which is great, and we couldn't think of anything better to introduce to our clients. We'll wrap this up. We'll just quickly go through we might take over the hosting duties.
So thanks a lot, Justin, Shane, and Larry. Great presentation. Like Azad said, you know, just click on their link there if you have more interest, or tomorrow if you want to do it, get a hold of them, and
we'll get a hold of us.
Yeah,
we'll pass the link on. And Justin, we hope to get out on the golf course again with you. That was fun last time. We'll take over the hosting duties and just finish up quickly. If you are new to us, thanks for joining in. We hope you liked tonight. It's a little different from what we normally do, but it is investing in real estate. Tim and I are the authors of 2 real estate books. One of them is called 1 Million Reasons to Buy Real Estate. It is a free ebook. If you are thinking of investing in real estate, we do recommend that you download it. You can download it for free on our website, calgaryrealestatewealth.com. And it gives you all the fundamentals that you need, that you should know, Tim, when you're getting into investing in real estate. Things like the 3 rates of return, dealing with tenants, why we invest in real estate, a whole bunch of stuff in there. It gives you actually the really good basic information that you need to know.
Yeah, so anybody new on the call, download it. It's a great way to get started. You know, it tells you all the ins and outs of investing in real estate, and it's free. So download it for sure.
The next book we wrote, it is $20, Fearless Real Estate. And as you can see, it's got a lot of our clients on the front cover. We did that for a reason. Most of these investment books out there are all about the author and how much money they own and what kind of private jets they're in and how many houses you can get. This will show you how many houses you can get, but it will show you the real way and the way our clients are doing it. We've got young people out there that are on their third, fourth, fifth property. I mean, they're under 30 years of age, Tim, which is unbelievable. It's got information in here that we wish we had when we started. That's the truth about Fearless Real Estate. We made lots and lots of mistakes just by simply reading this. You can avoid those and you know what, pick that right property and move forward and buy multiple
Yeah,
properties.
and it's actual client stories. So every story in there is about our clients doing actual real estate strategies today. So, you know, we have clients doing the same thing over and over and over again. We were in the house with one of our young investors today, actually, who is house hacking, which a lot of young people are doing. And, you know, he'll be on a tip of the month or tip of the week starting Tuesday.
Yeah, and it was his first property, and he's killing it. So we showcase that this book definitely showcases how people have got ahead and how you can too. The next thing, we're not here to sell you on this. It is our program. It's $997. It's designed simply to do one thing, and that's create $1 million worth of equity for you, not for us. We show you everything you need to know to get started, how to invest in real estate the right way. We design a plan, and we're here every step of the way. The best thing about it, it is a lifetime membership. So once you pay that, you become a member, and we keep updating the information. And the best thing about it, Tim, is that you get to deal with myself and Tim.
Yeah, you don't not only get access to us, but you get access to our whole team.
Yeah.
So, you know, Danielle, who was on earlier, she's part of our team. We've got lawyers, we've got accountants, we've got tradespeople, we've got, you know, everybody you'll need to help you out in your real estate investment career. So you get access to all of that.
And now we have Core Capital, who can help you invest without even doing anything, which is awesome. The other thing we want to tell you about, that if you're thinking it's for you or you're not, we created Crew TV. It's our YouTube channel. The link is in the chat there. You just press on that and you subscribe for free. And the best thing about our YouTube channel is that you get to see what these guys are doing, right, Tim?
Yeah.
And there's new videos every week. Actually, we've been doing pretty good, Tim.
That's a TV star.
Yeah, we thought we wouldn't be able to have enough content for a video a week. That is not a problem at all. We love it, and people out there have been watching it. It's almost got 40,000 views right now, and it's for free. You get free investment tips. So go on there and you can see how these people are getting ahead with real estate. If you do think real estate's for you, simply send us an email. That's the best way to get hold of us. If you needed to get Larry's info to find out more about Core Capital and Crystal Creek Homes, send us an email. We'll be able to get that info to you. And in 2 weeks' time, we have another webinar coming up. Right now, I just wanted to tell you guys something. We have, I think it was 4,828 members. We're trying to get to 5,000 members. We're nearly there. If you liked it tonight, please tell your friends at work tomorrow or at school or wherever you are to help us reach our 5,000 investors.
Yeah, so thanks again to Core Capital and Crystal Creek Homes. Great presentation, guys.
Yeah.
Lots of information, lots of, you know, something to think about if you want to place your money. If you're sitting on RSPs that are making a very small return, talk to these guys. You know, 12% is a great return right now. And, you know, we're happy to invite you guys all back to our next seminar in 2 weeks.
Yeah, it's all about raising capital for your next real estate deal. We'll see you then.
Yeah, bye-bye.